The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Good morning, folks. This is the Trade What You See Hour. It's just not Larry Pesavento. It's Steve Rhodes filling in for Larry for the day. Today is March 22nd, and feel free to give me a call at 877-927-6648. You don't have to call. You can always send me an email, steve@tfnn.com. And inside if you decide to send me an email, just tell me what it is you want to look at, time frames, things of that sort. And inside the subject heading of your email, just please put radio show question. Of course, inside the Tiger's Den, you can just simply ping me, either privately or publicly. Doesn't matter to me. I want to hear from you, because really what I want to do during this hour is take a look at the symbols, the futures contracts, the equities, whatever it is that you want to look at. I'm really here to provide you with information. So let's go ahead and get this show started. It is great to be back in the morning session. I used to do the 9 to 11 for several years, and it was always great to do this show because you had the equity futures markets going on, and that way when futures were moving higher or lower, in this case here, they're moving lower. You got the Dow off about 300 points right now, the NASDAQ off 109, was that you and I were able to go take a look at what was going on pattern-wise inside multiple time frames of those equity futures contracts to figure out what the next move might be or what it is that we should be looking for. So we're certainly going to do that. And we're going to start, though. I know that Larry likes to start by taking a look at the DAX. So let's do the same thing out here. And this is, by the way, this is the monthly chart of the DAX. And so important to take a look at because it's so important to understand what the long-term patterns are that are in play out here. So when we take a look at the DAX, it's a perfect setup for how you would take a look at a consolidation. Again, a monthly chart, and we're going back. There was a consolidation that began back in the 1995 time frame. Back in 2000, in essence, was the top of that consolidation box. So if you're not watching us live on Tiger TV, I'll try to give you some of those dates. What that equaled was a 5,950-point consolidation. The way a consolidation pattern works on whatever time frame it is that you identify that pattern is that when you see a break of the consolidation, then you have what's called a measured move. It's going to be equal to or greater than that measured move. So back in 2013, and we know that the DAX back in 2007 made it back up to its highs in 2000. We know that it was a good ceiling level for the consolidation. And if we take a look at when the DAX actually broke through that consolidation in 2013, that gave us a measured price move up to the 14,129 level. Now, it hasn't hit that, and that does not mean that 14,129 is the be-all to end-all because it's equal to or greater. Now, price did get up to 13,596. That's really not too bad. That's what, about 500 points or so away from the projection of 14,129. Now, what's also helpful, we take a look at the DAX, is you can see the rising price channel. Rising price channel are the green diagonal lines that we have on our screen. So as we speak right now, price is still within inside that rising price channel. We could take a look at a quick trend line. We'll go take a look at the daily. We'll take a look at the quick trend line out here. You see the monthly really gives the perspective of what's going on. You got the DAX trade out at 12,102. If we take a look at a trend line coming off of the most recent significant low, and I'm going to call that the February 2016 timeframe, perhaps what the DAX is doing is just going back and testing its friend, the trend, because the trend line is its trend. And for this month, that trend line would come in maybe around 11,706 something. We're not going to be exact on that, but maybe it's 11,006. Just depends on, which month and if it is going to go hit the trend line. If we switch over to, so that gives us the perspective, because as I put the daily chart up on my screen out here, we don't see any of those lines, so we don't really have that bigger perspective. Here's what we know right now about the DAX, is it trading out at 12,102. It's trading back into its swing point from March the 5th out here, the top of which is 12,110.18. I don't have volume, But at the close today, if price were to close above 12,110.18, near 12,103. So a close above it would say, okay, you have at least a rejection of the swing point. Whether it's with volume or not, I don't know. You close inside it, 12,110. Doesn't matter whether it's with volume or not. It says, okay, if it's with volume, it says you're more likely going to go test the bottom, 11,830. If it's without volume, it says you may go test the volume out there. So that is starting off with the DAX. Now, there's one other thing that there's really two other things you and I can do with the DAX out here. Let's take a look at the DAX. How important is it for us to take a look at the DAX? And the DAX is typically, or we have said, or I've said in the past, that if we take a look at the DAX, it's more similar, even though that is going to get me fired from the grammatical school of TFNN. But it is, if we take a look at its correlation just to determine, does it even make sense? Do we even have to look at what the DAX is doing out here? This is a chart that allows us to go ahead and take a look at the correlation. Now, this is a correlation. I've chosen the NASDAQ composite, good, bad, or indifferent wise. And the bottom panel of my chart, now I put the DAX up here as well. So panel 1 is the NASDAQ composite. Panel 2 is the DAX. Panel 3 is the tool that allows us to determine how correlated is it. And by correlation, the way that tool works is when the bars are above 0, it says that it's correlated, moving. If the DAX is moving higher, the composite's moving higher. If the DAX is moving lower, the composite's moving lower. Or it's one or the other. Who's to say who the leader of this gang is out here? And when price is below that line, it says that the DAX and the composite are not correlated. This is a 5-day average time frame out here. And over a 5-day average time frame, you'd have to say, hey, you know what? Pretty well correlated. We can change that time frame. I can take a look at a 2-week trading time frame, and we can see it's even more correlated. And we can take a look at a 4-week, which would be 20 trading sessions out there. And so you can see its correlation effect. I'm just sticking with the short term, the 1-week correlation out there, just to give you an idea. Now, the DAX is going to be moving higher or lower, also taking into consideration what the heck is going on with currencies around the world. Certainly its currency that it's trading at, the euro, and we can take a look at the DAX and determine how is it doing with regard to currencies around the world. Because the reality is when you and I, this is a one world market, and when you and I take a look at what instruments are doing, indices are doing, individual stocks are doing, individual sectors are doing, especially in an environment where prices have been moving higher with light volume, to the extent that you want to answer that question as why, well, what you really need to understand is how are these instruments trading around the world in other currencies? You and I, we're sitting here thinking in terms of dollars. At least I am, if I'm taking a look at the DAX. That's out at 12,089. But as far as euros are concerned, that's not the case. It's 9,821 euros that the DAX is trading in right now. Here's what we can see. Here's what this chart shows us. The DAX in dollars, the DAX in euros, that's panel 2, the DAX in yen, panel 3, and the DAX in pounds. There's no breakout whatsoever in any currency. This is Steve Rhodes with TFNN. We'll be right back. Hey, how about that NASDAQ? What's it doing in other currencies? We'll go immediately to the futures markets. We'll go try to figure out what buyers and sellers are communicating to you and I at just past 9 o'clock in the morning. Steve Rhodes filling in for Larry Pesavento. We'll be right back.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So our first question that came in by email from Tom, and Tom says, good morning, Steve. So I say good morning, Tom. Says, you're the early bird today, and early bird every day, just not on the air necessarily. And so Tom is wondering what advice we can give him. He likes to trade the Velocity Daily 2-time VIX exchange traded note out there. That's a big word to say, or a lot of words to say out there. And he bought that at 723 all day yesterday. Right now it's trading out at 852. And so, Tom, the chart that I've got on my screen, it is a super short-term chart. In essence, it's a 3-minute time frame chart. And the tool that I have found, because you like to trade this vehicle, the tool that I have found that I think, and you're very good at it, so consider adding or getting TAS market profiles and putting the TVIX on a short-term time frame, because these market profiles really help to provide you with great information about what this is doing. So we're taking a look at the pre-market hours out here. We've added that to this chart. And the way that these profiles work, and what's great about them, is that the way that these profiles work, I'm just trying to find a tab out here. If I go ahead and turn off price, they give us a lot of information. Here what you're seeing, the bottom of these boxes are in green. The center line is the cyan color, and the red happens to be at the top of the boxes. When the middle of the box, the cyan color, is either closer to the top or the bottom. Right here with regard to my cursor, if I'm going at about the 1600 hour on March 21st, this is yesterday, you can see this was a bullish structured box out here. Now, bullish structured box means that the bottom should hold. The bottom there was about $7.48. Price closes above resistance. That says, okay, this instrument should continue to move to the upside out here. We can see that the last two boxes, these are ones forming here at about 8 o'clock this morning. We can see that this was a bullish structured box, just as the one that is formed during the last 3 minutes. Now we'll go ahead and put price up here for you. And in essence, inside the TVIX, Tom, on a short-term basis, you would like to see the price level of $8.45 hold. You don't have to use that as your stop. You can use something underneath that. But if you were to see a close below that, it says, well, okay, maybe you're seeing some type of change in trend. Now, you were buying this all day yesterday. Maybe you were thinking more longer term. So from a longer term standpoint, if I was going to give you a target as to where the spot volatility index might trade to, I would look to this chart right here that says you're trading at about 2017 right now. And for me, the price target would be the top of this Bollinger Band that's out here, $23.76. That says that, in fact, the TVIX should continue to move higher. But what you want to also do, or I think you want to do, is you want to take a look at what's going on inside the ES Mini. And if we do that right now, just trying to pull all this, one of our favorite patterns, well, we have several favorite patterns. Yesterday afternoon, if you happen to catch the show that I do between 1 and 2, one of our emailers asked if I could do the wave count inside of the ES Mini, which we did. And when yesterday, this was before, because my show ends just before 2 p.m., but as the Fed had released its decision, and then between 2:30, I'm sorry, then between 2 and 2:30, what we saw price spike higher inside the ES Mini. Happen to get to, if you're watching us on Tiger TV, wave letter number G, which Stevie likes to call the 7th inning stretch, the 7th wave move out there. Oftentimes where you see a change in trend. Now to the downside on a 30-minute basis here, you're only in wave number 5, but this is just, the wave count is only one pattern. It's a pattern that we do like to pay attention to. The other patterns that, Tom, you and I like to pay attention to are what's happening with price as it's moving higher or lower on multiple time frame charts. As we speak right now on a 30-minute time frame, price is moving lower. Doing it with less emphasis, with less energy out there. That's those black diagonal lines on my screen. That doesn't mean that this is a bottom. That means that this is a potential bottom or short-term bottom. We have to stay with the time frame chart that we're trading on. Should by 9:30. Should between 9:30 and 10. Between 10, this is a 30-minute chart, and 10:30, we see this continued pattern form, but we see bullish reversal signals. Then what you and I would be watching for is what happens at Stevie's red line. That's referred to the oscillator unchanged line, but that's a whole lot more difficult to say versus Stevie's red line. That number right now is 26.96. What you and I do is we take the information that the market gives to us. That's why we love to make sure, and this is, I'm saying this to each of you that are listening out there, that's why each of us make sure we have access to the equity futures contracts. You don't have to trade the futures, but if you're trying to understand what the indices are doing and why, what you need is you need to have more information. And by more information, you need to know what was going on overnight. The day of trading or making your decisions based upon what the ETFs are doing, based on a 6.5-hour day in a one world market, that's old. That's archaic. Those messages were only as good as yesterday. And I don't want you being a prisoner of your past. Instead, I want you to be a pioneer of your future. And in order to do that, you need to know what's been going on in the market since last night's close out here. And as we speak right now, you see a little bit of a hammer. But we've got 6 minutes to go in this trading session out here. So, Tom, I've been able to give you on a very short-term basis a level of what should hold as support. Now we've just gone up to a 30-minute. That's from a 3-minute to a 30-minute, tenfold increase in time. And we'll just simply have to watch, and we'll do that during the show today. What type of signals, if anything? Does that mean that's the bottom of the bottom? No, not necessarily. We're looking at a 30-minute chart. You've given you the long-term time frame, too, as well, as to where the volatility index ought to go to until it tells us something different out there. We've got a request, or somebody put in something about the 120-minute time frame chart out here. On my 120-minute time frame chart, I simply have this moving lower with less relative energy out there. I've got a different wave count. That doesn't matter. This is one of those patterns. This is a 2-hour chart. This 2-hour chart says that this candle here doesn't complete until 10, I believe, 10 o'clock. So we've got a long way to go before this 2-hour time frame chart forms and gives us any type of signal. Of course, most folks would like me to go take a look at what do the TAS market profiles say. And as we do that, inside the ES Mini, Tom, and this is really for you and everybody else who might be trading the ES Mini, the daily time frames, they give us bupkis. Nothing, nada, zilch, zip. We haven't seen a new profile form anytime soon out here. So the best that we can say at this stage is price inside the ES Mini has traded into the March 2nd swing point, the top of which is 2,703 ticks, 0.75. Any close today above that would say you would have a rejection of a swing point. At this stage, you're trading inside it. So you're trading inside it from a daily perspective. As long as price stays inside there, no reason that it can't go test 2651.75 out there. If we take a look at what's going on inside the NQ right now, it's testing, and it's more than testing. It's below the top of its daily box, which thus far has held on tests over the past couple of weeks out here. That price number is 68.49. You close underneath that, well, you head back towards that March 2nd time frame as well. That low, 66.72. The interesting thing here, and the profile to really watch, is the Dow, the weak link in the chain. And it has already tested the bottom of its box. Will it hold? That number, 24,389. This is trade what Steve sees and Larry Pesavento sees. Upgrade.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're off to the races. We've got the Dow trading down 255 points, 24,424 is the print. S&P's off 26 points. NASDAQ 100 down 86. Russell's off 13. So the leader to the downside percentage-wise is the NASDAQ. No, it's the semiconductors up about 1.5%. That's 21 points to the downside. The transports are off about 1%. Spot volatility index up $2. Now, the spot volatility index is up 13%. We have a long way in the day out there. But that's something that Stevie always looks at the end of the trading session. Because should you see the spot volatility index have a one-day rate of change, meaning the difference between yesterday's close and today's close, a one-day rate of change greater than 10%, what you can anticipate is a bounce or bottom inside the ES mini out there. Well, and I'd say the other futures contracts as well, but I was really focus and tie those two together with regard to what's going on in the volatility index and the ES mini out there. So a lot of time left in the trading session, 6.5 hours basically. So we won't spend too much time on that. You've got gold trading out at 13.29 after running into resistance at about the 13.39 level. Silver is trading up 3 pennies. It's trading out at 16.45. Light sweet crude back about 70 cents right now, 64.47 there. We've got requests if we can take a look at gold and all currencies as well. We'll certainly do that. We'll take a look at gold for you. Back to the ES mini on that 30-minute basis. No hammer candle that formed there. So again, those are patterns that we pay attention to, but we are very specific with regard to making any calls just because a pattern shows up. And this is where you want to talk about trade what you see and understand my experience. You have to understand I knew nothing. When I say nothing, zilch, zero, nada, zip, back in 2006. I knew nothing. My portfolio had, when I first approached Tom, when I first heard Tom on the radio, and it was only one show that I listened to for about 15 minutes, when I said, I want to go learn technical analysis, very much like yourself out there. Some of you may have had that same experience. And I had about 80, 90 different individual equity positions inside of my accounts at that time. They were a lot to manage. It took me a lot of hours on a weekend to reestablish price targets and stops and things of that sort. Remember, I had no technical analysis whatsoever out there, but I began by simply going to one of Tom's master trader courses, spending, shelling out the $2-3 grand, whatever it was at that time. Because quite frankly, the amount that I've spent and invested inside of technical analysis, way less expensive than what it was costing me my portfolio when something fell out of bed. And I didn't know why, because it was a great equity and it just simply fell out of bed. And that technical analysis piece of it really helps you to understand if something's going to fall out of bed, where it ought to be able to find support. And you can then reassess your reward risk trade out there on your different instruments. Well, the trade, what you see and how I tie that in is, a lot of times you'll see people when there's a problem, what they do is they spend 95% on the problem and 5% on the solution. Do you know anybody like that? You might know somebody like that out there. The real key, folks, to being able to solve problems, and remember, when these patterns that I learned didn't work, I also want to understand why. It was because I spent 95% of my time on the solution out there. And so part of that solution was connecting the dots, and those dots being understanding these Japanese candlesticks. Whew, boy, that's a long way to tie into whether or not there was a hammer candle that formed on a 30-minute time frame or any pattern that's out there. Folks, if you take whatever pattern it is that you trade, it doesn't matter to me what it is, and you can tie that into understanding the 14. There's really 7 bullish reversal candles that you need to know and 7 bearish reversal candle signals that you need to know. If you do that, you will see your win-loss ratio increase out there. You will understand when A to B equals C to the lightning bolt pattern. I certainly learned that from Larry out there, and then simply mastered it myself by spending 95% of the time on why did these not work at the 1-to-1 A to B equals CD, or the 1-to-1 0.272, or the 1-to-1 0.618. And it's all about understanding the cavalry and when they show up, and they cannot hide. And they are the bulls and the bears out there. All right, let's go back to these markets. Let's go try to answer some of these questions like, hey, what's going on inside gold? So the first question was, and we've got to find that chart, if we take a look at gold priced in the 4 major currencies out here, because that's what I would have. So we've got, see if I can find this chart. If I can't find it quickly, then what I will do is I will, here we go, I found it. We don't have to even worry. Here's gold. Now, this is a monthly chart that you and I are taking a look at out here. The chart on the left-hand side is gold priced in dollars, U.S. dollars out here. Now, here's the important thing for you to notice when we take a look at this monthly chart. Here's the mucho grande important thing for you to notice with regard to trading gold, albeit a monthly chart. When you take a look at gold breaking out in dollars back in the 2002 time frame out here, and in essence, that's where my cursor's at. That's the left-hand side panel of my screen. What was gold doing in all currencies? You see, a lot of people think that gold is just about the U.S. dollar index out there. And I would hearken to say, maybe you should look at some charts that take a look at gold priced in other currencies. Well, you've got it in front of you right now. Panel number 2 is gold priced in euros. Panel number 3 is gold priced in yen. Panel number 4 is gold priced in the pounds out there. Yes, those 3 currencies make up a significant portion of the U.S. dollar index. The point here is that in order for gold to have any kind of sustained breakout in dollars, it must, let me underscore that, it must be able to be breaking out in those currencies as well. That means gold itself needs to be moving higher. That's what led to the huge run into the top in 2011. So Peter wanted to understand, hey, what's gold doing right now inside of currencies out here? And until gold in dollars clears 1377.50, it's certainly not breaking out. Getting above that level would be a significant move inside of gold. In gold priced in euros, what you would take right now is just simply from its high, breaking the descending trend line out there. We're taking a look at a trend line in this case here, not a channel line. If we take a look at gold priced in yen, you'll see the cone of silence from, none other than, what was it, Don Adams, right? What was his name out there? Get smart, right? Well, in any event out here, gold priced in yen needs to at least start breaking out. In order to break out, get smart. In order to break out, needs to get above its descending trend line. In the case of pounds, we'll be looking at the 1,059.80. So you're over in London and you're sitting there and you see that a coin, a 1 ounce coin, a Krugerrand or a Canadian Maple Leaf or whatever, gold is just simply in pounds trading above 1059.80. You'll be able to say, that Steve-O guy, he helped me to understand when gold was really breaking out to the upside. So I hope, Peter, that helps you out with regard to what gold is doing out there. Let's take a little bit closer approach, a closer look, and try to figure out what is gold doing. And we'll come back and try to find a chart out here that helps us understand some of those things. Well, here on this chart here, what we can see is 4 different time frames with regard to their market profiles for Goldilocks. The one to pay attention to is the daily chart. Now, I gave you a figure there of, 1377 or whatever it was to see a real significant level get taken out. Right now, from a daily standpoint, you're hoping for 1339, the top of its TAS daily profile. That'll bring out 1357 in a hurry. We'll be right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Welcome back, folks. James writes in and asks if there's an island top forming in Micron. MU is the ticker symbol. And also any chance that the QQQ will bottom soon. Thanks, Steve, for all you do. Well, James, first with regard to Micron out here, no island top that has formed out here. In order for an island top to form inside of Micron, you would need to see this gap down below 56.35. and not trade up to 56.35. Right now you're trading at 59.87. An island top looks like this. Let's just simply go back to the NDX 100. You'll see the island top out here. In order for there to be an island top, you need a clear gap to the upside and then a gap to the downside where there is a clearance of price. Let me just simply circle the horses, so to speak, by using a rectangle out here. Here is your island. In your island top formation, if we take a look at the trading session, James, go back, take a look at March 8th. You'll see that the high out there was 69.71. The very next trading session, this gap's the upside. The low, 7.007. There is our first gap. The next gap that counts is when price, in essence, gaps below that 7.00730. That's what took place on the trading, and that's before the gap gets closed. That is the March 19th. March 19th, the high 69.49. Island tops out here is the individual stocks are more bearish than they are in indices out here. At least that's what Stevie believes. But you still pay attention to the island tops inside of the NDX 100. If we go back, there's several that have formed out here inside the NDX over time. I believe there was one back here in, well, I don't want to give you the dates. I don't want to screw this up and give you some wrong dates out here. I just don't want to do that. But I have done the study on them to know that it's when they do form, you typically do see price continue to trade lower. Well, we've got that as we speak right now. You were asking about the Qs. You didn't really give me the time frame out here. If we take a look at the NDX 100 as an example, and take a look at what it's doing right now, we can see price was moving lower, doing with less relative energy. This candle doesn't complete until 10 o'clock. But if the body of the candle closes over the opening of the candle session, let me see if I can actually give you the number out here. I can. It's just I don't know if it'll show up on this right now. I got to do it some other way. I'll give you an estimate around 67, 88, 50. If you close up 50 out there, 50 cents. If you close above that, then you'd have a bullish engulfing candle. The key inside the NQ, if you're going to see a bounce, is it needs to close above Stevie's red line. That's acted as resistance until resistance fails. That number's about 67, 98. It's going to change as price moves up and down out here. Then you would be looking at a potential short-term bottom. Where would price trade up to? That's a great question. I would give you the 68.74, and taking a look at this chart is where price could head up to. But price inside the NQ, which will go simply take a look at a short-term bottom out there, that's what it would need. If I look at the ESPN, I believe I misspoke, because I said that there was not a hammer candle on the ES Mini on a 30-minute time frame at 9:30, and that was wrong. That was I apologize. Please, I take it back. There was a hammer candle that did form, telling us that the ES Mini on a short-term basis is trying to hammer out a bottom. What you're looking forward to now, what you're looking for now, it's really what I meant to say, is you're looking for follow through to the upside, and follow through to the upside is closing above Stevie's red line, the oscillator unchanged line. Until then, you continue to have a falling price oscillator below zero. That's the bottom panel out there. That's the difference between two exponential moving averages, 19 and 39, and that's bearish. So bouncing up to resistance, and that's what the red line is right now, and that number is 26.95. That'll change by a point or so as price moves. That's what you would need to see in order to see at least your first counter trend rally or a counter trend rally form inside the ES. Just because the bullish candle. Remember, if you spend 95% of your time on solving a problem such as, well, gee, Steve, I got price moving lower, doing less relative energy. I see that. You get the bullish candle. The cavalry arrived. Why can't I just take a position right now? You can if you're an intraday trader. I'd suggest waiting for more information. You'll find yourself ahead of the game more often than not by just really getting the messages of the market. And for these eyes, these Stevie eyes, that is what I call trading what I see out here. So hopefully that helps you out with regard to both an island top and whether or not we see a bottom inside of the Qs. If you want me to give you a day of when the Qs might bottom, I'll say give me a ring on Tuesday, Monday or Tuesday of next week. And that's what I see as a 9:47 in the morning on, what is today, March the 22nd, all day long. So no other questions that have come in, I believe. And if there was a question that was posted in the den because all that stuff moves so quickly, please retype it in there for me, and I'll be happy to go ahead and get to your specific question out there. Let's take a look at, boy, big move inside of the 30-year Treasury out here, up over a full point as we speak, 1% to the upside. So what are the Treasury bonds, the 30-year, doing? And didn't they just raise interest rates yesterday? If you didn't catch the 2 o'clock show, go watch the archive. I don't want to go through everything now that I did yesterday, but go watch the 2 o'clock show. Was it 1 o'clock? I got to remember what time do I do. You can watch the 2 o'clock show, too. That's one that is done by your favorite polar bear and mine, David White. But if you go watch the archive, you can do it on YouTube. Just put in my name, TFNN, and yesterday's date. It'll pop up out there. And I believe I did it during the first segment. It'll help answer the question of, well, how can T-bond futures be moving to the upside? But the question somebody should be wanting to know is, well, where are Treasury bonds headed to? So let's go try to answer that question. Go take a look at its market profiles out here. And we're going to go form and focus on the daily time frame. The daily time frame says 1:45 and 11:30 seconds out there. The actual high that we have seen so far today is 1:45 and 10:30 seconds. So does that mean that's the end of the move in T-bond futures? It might be. It very well might be. If you were long T-bond futures right now, you would be tightening up your stop because that is resistance. Now, what you would want to see in order for this to move higher, by moving higher, we can go take a look at to where you want to see price close above resistance, 145.11. No difference than when we take a look at the gold contract and you want to see price close above 1339. 1339 is the top of its daily box out there. The profiles that really look cool, though, are on that 30-year Treasury. Because if you come back and you take a look at the daily profile and you look at where yesterday's spike to the downside found support, you will see it's at the bottom of its profile level, the bottom of its bullish structured box. That was 143 even Steven. Now, yesterday's low was just a couple of ticks below that out there, 142 and 30 seconds, so just a tad below, found support. You find support in a bullish structured box, where do you head to? You head to the top of the box. It's just that simple. Steve Rhodes with TFNN. Right now, we've got the Dow. She's off 231 points. S&P down 22. NASDAQ 100 down 62 points out there. Looks to me like price is trading in the NQ above Stevie's red line. 9 minutes to go, though. We'll be right back. You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So in our last 2 minutes here, let me just share a couple things with you. For those of you that are just, you're really into technical analysis, you really try to understand these patterns that we trade, whether they're the Gartley buy and sell, the butterfly buy and sell, just the A to B equals CD, maybe the 7th wave move, maybe price moving higher or lower with less relative energy, how to trade those patterns. And consider test driving if you haven't yet. Mastering Probability, just go over to the homepage of TFNN.com, and under newsletters and trading newsletters, you'll see my name, and you can test drive it for the next 30 days out there. And by test driving, I mean you put your credit card down up front. I believe if you pay for something, you pay attention. You can cancel it within 30 days. The unconditional money-back guarantee, so it doesn't get easier than that. You hear the commercial every now and then. Maybe you heard the commercial there where the Timers Digest group began tracking my signals last March 15th. To be exact, and that meant that this past weekend they finally had a full year worth of my signals, which means that from that point forward they can produce what my signals say about the markets. Those markets being the S&P 500, being gold, and being T-bonds, kind of like the mixed portfolio bag out there. And I am happy to say that for the first full year of tracking my signals, I'm number one in gold. Kind of makes sense, doesn't it? I started off my technical analysis training by visiting Tom first. Back in 2009 was when I went ahead and moved over to Clearwater and spent some time there, right? Spent some time there to be trained by who else? The number one gold timer in 2009. Kind of rubs off, doesn't it? And through yesterday, I was number two for the S&P 500. That does not mean I get every decision correct. That's not what trading is about. Trading is about mastering probability. It's about protecting your capital, and it's about understanding the patterns that are available inside this market. So, folks, thanks for letting me be here with you. Larry will be back tomorrow. You can catch my show at 1 to 2 each day, or you can watch it on the archives of Tiger TV. Have a terrific Thursday, and I'll see you soon, I hope. Take care.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.